Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Texas investor shares his winding road from a non-target to starting law school to a sudden pivot to a master's in finance. Learn how he broke into a bulge bracket investment bank and why he was so eager to get out, and what it was like working for several family offices in the fund-to-funds space as a capital allocator. Enjoy. All right, Texas investor, thanks so much for joining the Wall Street Oasis podcast.
Thanks for having me. Pleasure to be on.
It'd be great if you could just give the listeners a short summary of your bio.
Yeah, so as my name implies, I am from Texas. I did my undergrad in accounting. Had the bright idea I was going to actually go be a tax attorney. Might have been some family pressure there. So I was actually a law school student for a year. Really knew I always wanted to be in investing, investment management, finance, broadly. And year in, decided I'd made a terrible mistake. Went and got my master's in finance and really built well on the accounting background. And now I'm professionally working as an institutional investor and have worked at several family offices and institutions, I guess you'd say.
Great. So let's start all the way back at undergrad. Were you always thinking like, okay, why accounting? Was your family like, it's safe, just go do that? Tell me a little bit more about like your background and why that was something that attracted you.
So it's, believe it or not, it wasn't because I wanted to be an accountant. Interesting. So one of my uncles is, he's a very successful, Big Four accountant, partner, all that. And both my parents are artists. And so I was like, oh, that guy has money. So like, it was just kind of, that was the only direction I had to get into business. So obviously that was pretty guided. To be fair, I graduated in 3 years. So I kind of like, as I was figuring out what I wanted to do, it was a little too late. And, I think that's where I really knew I wanted to do finance or investing, but kind of was already on a path to do accounting, but specifically I was going to be a tax attorney and more corporate finance. So look, by the time I was, your freshman year, you're having fun, your sophomore year, you're kind of actually getting into the meat of college. And then really by my third year, I was already studying for the LSAT, applying to schools, and didn't really have time to be methodical about.
Did anybody like influence you in your family that was like, hey, you should go do this, like be a tax attorney is what you said? A tax?
Yeah. Well, it was, again, uncle, he was telling me what he was hiring, tax attorneys out of school for. I was like, that sounds awful, but I want to do that. So, honestly, that was
meaning
one thing I really,
like the pay seemed attractive. It was like 80K or whatever, 100K or 100.
Oh,
150.
Could have been, yeah. It could have been high, even higher, depending.
Oh, wow. Okay.
But again,
with your JD, that makes sense with your JD too. Yeah.
But it depends though. Like that's one thing you learn is it's a different thing when you're a high school kid or into college, and then a little bit more once you actually get into it, you get a little bit more perspective, I guess you could say.
So tell me about how that. So it sounded like kind of by your third year, you were already kind of headed down that path. You felt like you couldn't stop.
Exactly.
And so you kind of just were like, hey, let me just take the LSAT. I'll get into law school. Yep. Or I'll see how I do on the LSAT. So you did well on the LSAT, or well enough to get in. Mm-hmm. What was your thought process in terms of what law school to get into? Was like your LSAT like a big determinant of that, or was it like just financial aid? What was that whole picture like?
It came down to money for me. Like, I got accepted to a number of schools, got decent scholarships into a number of schools, and then maybe it's the accountant in me. Like there was some of those really top schools. I was like, there's no way in hell I'm going to pay that much money for a degree. So it was the perfect mixture of affordability, quality, and, they had a focus program for tax. So that's really where I left the analysis.
Okay. So you accept this specific law school, you go, and when does it hit you that you're just not going to do 3 years there?
Pretty quick, actually. Probably when I was moving in. I think it was one of the two, like, I knew in undergrad, like it was kind of like to your point, I knew it was not the decision I wanted to make. And
I'm
again, it
curious,
was
like the
just,
family. Tell me about the family pressure then. Like the uncle really kind of was like pushing you, like this is just really good. It's safe. This is a path.
I
I
would
can
actually
help you.
say it was less of pressure, just more of lack of perspective. So in the sense of like, that's kind of what you knew. And I don't mean that negatively. Like
Hmm.
my family was actually shockingly supportive. It was just, I didn't know what investment banking was. I didn't know what investment management was. I mean, for me, it was, I think you can buy stocks and bonds, but other than that, that's kind of where all I knew. So,
Right. It was like there wasn't a depth to the understanding of careers that
yep,
like you would get
exactly.
from listening to the Wall Street Oasis podcast. Just kidding.
No, it's very one of the most critical mistakes of my law school path. So,
It's good. A lot of undergrads listen to this, and I think it's important
yep.
because they get a little bit of a taste of the little twists and turns. So, okay, so you're there for a full year or like a semester, and then you just peace out. Like,
Yeah, I did a year.
okay,
It was kind of just made sense.
hmm
Look, to be fair, I think I knew. I think the way I was trying to talk myself into continuing is like law school's still a roundabout way of getting into finance, right? Plenty of lawyers or hedge
yeah,
fund managers or investors.
hmm
But let's be real, it's a really roundabout and inefficient way of getting there,
hmm
and very expensive as well.
yes. So what
So
were you paying with all the not being the most expensive, like 30K for a
yeah,
year,
I think tuition was like with scholarships, tuition was 10 to 10ish. So it
10?
was
No,
it was
not
like
bad.
it was very like I financially it was not a really bad decision. Like and again
Right.
that's what drove it. Like I could
It
have
didn't
gone and
sink
paid
you into a hole, a deep hole of like
exactly.
$60,000.
Yeah. Yeah.
Okay. Okay. So you're kind of coming up on you're trying to convince yourself to keep going. You're kind of approaching that end of that first year. And then what was that switch that said, no, I'm gonna go jump and do a master's, master's of finance.
Well, I think for me, honestly, it's just I didn't know that existed. Again, a lot of this is just like kind of discovery, and
So
you realize it.
tell me when you came across that stuff. Like when was finance finally like, okay, wait, I actually kind of like this investment thing.
It was honestly first the whatever freshman or entry level finance I took in undergrad. That was like this is cool. I like this.
Okay.
Again, I think it was just due to the shortened path of my undergrad program,
You
kind
never
of
really kind of were
momentum.
able to explore that fully or go
Exactly.
down that path. So when did you learn about the master's in finance and how did you apply to that so fast and then make that jump? And, I
Uh,
assume it was like you finished your first year and then jumped right into your,
yeah, I mean, it was a friend. It was honestly just a friend that had gone there, told me about it.
hmm
I'll be frank, I kind of got lucky with the application, just in the sense of I was a relatively untraditional student, so I think I was able to sail through a bit. I frankly just called up the schools like, hey, this is my background. I didn't have, I think I still took a GMAT or whatever the entrance exam was, but
right.
it was more of like, look, this is what I want to do. This is my background. Like, can you let me in? And so it was, obviously I still went through the application process and all that, but it was just having a dialogue with the whatever the dean or the person there and explaining my situation, what I wanted to do, and making sure there's the right fit for both of us. So,
Do you feel like with a master's so how much did you have mapped out before? Let's start there before when you made that call to the dean.
um,
Like, were you like, I know I want to
yeah,
be in investment
yeah.
banking? Were you saying, I know I want to
No, I
be
wanted to be in investment
investment,
management, so like I knew
investment
for sure,
management?
right? And it
Yep.
was like, and I don't know
Define
how
investment management because it's such an umbrella term. Like, did you know specifically what you want to do in investment management? Like, or it was just like,
going in. No, in grad school, I knew it was alternative investments.
okay,
So, to the extent you could specialize, which you really can't learn alternative investments in grad school or
hmm
in any sort of formal setting. So it was speaking with, I had a couple professors that were either hedge fund managers or teaching really specific courses on like, futures or options or things like that. It was like, okay, this is cool.
And so
And
for the
so,
listeners, alternative investments meaning options, futures, that type of stuff, or alternatives being
alternative
hedge funds.
investments, well, hedge funds, private equity. I mean, I guess you can define it as anything, right?
Yeah,
So,
yeah.
I mean, if you're for super, super basic, kind of explain it to my parents. If you have your traditional investments, think your Fidelity Schwabs, they're putting your financial advisors putting you in Exxon or municipal bond or Exxon bond, right?
Yeah.
Alternative investment is literally anything else because the one thing you learn about investments is you can invest in almost anything you can imagine. So it's that whole world. That's why I like it the most. It's the most intellectually stimulating. You get to learn about all sorts of bizarre things, dynamics, ecosystems, just everything.
Small
And
liquid markets.
oh, it's fantastic. Like,
Yeah.
there's a guy that's starting a fund that's investing in Broadway plays. And they've developed an algorithm that helps identify the characteristics of the most
That's
successful
awesome.
plays. And so that's the whole point. Is it's just so intellectually stimulating. You get to learn about things you know you didn't even know existed, right? And
Hmm.
not only do you learn about them, you learn how to potentially make or lose money in them. So that's the best part. So
Because you had a broad sense that you wanted to go investment management. You had that conversation with
mhm.
the dean. Did you feel like you were going to get in because masters in finance programs, they're typically pretty expensive, and I think they're a good
Yep.
moneymaker for the school. Did you feel like they pretty much had the door open, or did you feel like you still had to get a decent score on the GMAT? Like, is the acceptance rate pretty high on those?
I mean, I don't know about I think my program was so, but look, I think that one was one. I should probably be careful saying this. It was kind of one of those, like, if you're going to write a check, they'll find a way to get you in, to your point. Like,
Yeah. That's a sense
it's
that I get, to be fair. Like, that's a sense that I get for a lot of these programs, even though they're good, they're nice little feeders.
yeah. Well, it's same with MBA, frankly, too. Like, right, when we graduated, there was executive MBA, professional MBA. I mean, there was 2 hours of MBAs being announced across the stage. So I think the key point with these is know what you're using it for, right?
Mm-hmm.
It's don't go do it for the sake of doing it. It's same with law school. Like, if you're going to go spend an exorbitant amount of money and time on a degree, what is the end to that? What
Right.
is what are you trying to achieve specifically?
So you felt like the Master of Finance was a better fit for you. It was 1 year instead of 2, instead of the MBA.
Exactly.
That type of stuff. Okay, so you went in there thinking, I'm just going to go here. I'm going to leverage it to get into some sort of investment management role. And did you? What was the outcome as you approached? Because you basically are recruiting right when you start, right? Because you just have that
Yep.
one. You basically do the year and you're done.
Yeah. So it's kind of interesting. Again, I was in a similar circumstance of, so I did banking out of school. I was after my finance degree,
Mm-hmm.
and it was interesting. Like, I mean, as your viewers probably certainly know much better than I did at the time, of like, that is a whole thing, like the investment banking recruiting process, the like knowing the firms, all of that. And I was kind of like just thrown into it. And I was like, what is this investment banking thing everybody seems to be so excited about? And then, people come in and be like, oh, it's horrible. They work you to death. Like, it's miserable. And I'm like, why are you signing up for this? But again, like, it's funny. I ended up going that route because the key point is, for better, for worse, it opens a lot of doors,
It
right?
opens
It's
the
a
doors. I
standard.
know it's the easy answer, right? It's like, yeah, you suffer, but then all of a sudden everyone's like, hey, start getting calls from recruiters, right?
And the key thing is too, is like, you could be an objectively talented person, but if you're looking to land a job at a family office, a hedge fund, et cetera, there's a standard that at least, and it might be wrong, but at least people are like, I know so-and-so was at least good enough to complete Goldman program or Merrill Lynch program, or
right.
so I mean, that's just the way it works, right? That's the game. So
yeah, it kind of gives that stamp of approval. Then the smaller kind of family offices that don't have the training to bring you in feel more comfortable. That you're not going to be completely lost. Okay, so tell me about that relatively short stint, I'll call it, in banking. Tell me, what was it like when you first started? You're kind of, well, first tell me about the recruiting. So you're in your master's in finance. Was it you kind of got swept up in the whole system of that? Tell me a little bit about what the interviews were like. Were you ready? Did you feel like how did you get ready, and did you crash and burn? Did you strike
I
out?
mean, I crashed and burned to like one. I actually remember pretty distinctly. And it was one of those, I showed up for the super day or whatever, and they make you take the test and all that.
Mm-hmm.
I was pretty unprepared, frankly.
What test? What do you mean?
Well, so I took like an accounting test, build a bunch of, financial model on spot. And again, I know this, but I wasn't expecting it. So I guess crash and burn would be an overstatement, but I certainly didn't do as good as I would have liked.
Right.
So I think fortunately for me, that was pretty early in the recruiting cycle. So, I mean, I certainly tailored and prepared for the other one. So I wouldn't discount that at all. Right.
Okay.
So,
I
the
assume
role
most of it, like besides that modeling test, I assume most of it though was behavioral or fit. Well, maybe with your accounting background, they might have drilled you a little bit.
Yeah, no, I mean, they made me build. I remember the 3 statement, and again, it was more of a boutique bank. It was so it was not I don't think they
bulge
had the
bracket.
resources. Yeah. So they didn't have, I don't think the process would have been as typical as like, we're going to go train you and, you with 100 other analysts. They needed you to probably
Do
be
that
much more
stuff.
prepared. Yeah.
Yeah. Okay.
Exactly.
So that's fair. Okay. So you end up at a bulge bracket
Yep.
and you are in the credit team. Is that right?
Yeah. So I always got confused with the acronym. So,
Yeah. So
but
tell me like what this, like, yeah, what is that? What is
so I
that?
was in the levered finance. So we were within
Okay.
the investment bank, and my group specifically was working in your special assets or levered finance group.
Mm-hmm.
So we were essentially working with your companies that were having trouble. Let's just say that.
Okay.
And so it was interesting. So we worked on lots of transactions with the investment bank, right? We were just more on the credit side of whatever deal that was being done. So
Mm-hmm.
there was one LBO I remember I was on, and it was you're part of the whole process, but we were focused on how would we underwrite and syndicate this credit risk.
Yep.
And so, that was the flavor I took from it. Downsides were, I remember, the hours people talk about, right? Those same proverbial sleeping under your desk and all that. People weren't the nicest. And just to give you an idea of that group, there was 3 people when I started. I left, in about a year. I was the last person to leave. So it was just,
You lived in under a year and you were the last person to leave.
exactly. So
That's not a good omen. That group
no,
was
and
tough. That group was tough.
it was,
Yeah. Uh-huh.
and I think frankly they had a reputation for it.
Yeah.
And with that said, it sucked. I mean, I'm not gonna, that's how I thought about it. But
this is good why we stay anonymous, because we don't have to name the bank or anything, but it's just good for people to know, to have their eyes open, so if they can get some of that group specific dynamics and information. Not that you necessarily had a choice, be like, hey, get me out of this group, but just if people do, and they can kind of push for other groups that potentially are a little more reasonable on the work-life balance, let's call it.
But listen to that. That's serious. Because I remember everybody was saying that coming in, like, oh, it's this group. Oh yeah, I've heard stories. You're like, yeah, whatever. But it's real, right?
Yeah. Then you get there and you're like, oh shit, this is it. Hearing about 80-hour weeks or 100-hour weeks is much different than actually sitting there and doing it.
Yeah. I mean, I'm not gonna lie. There was a time I was like, I'll go join the Navy. I'll do anything. It was just, again, it was,
so within 6 months, you're like, I can't do this.
Yeah.
You're getting crushed. Yeah. And so tell me, you started talking to recruiters. I mean, that's early to look, right? Would they even take your call? What's the deal? Or I guess not. It's not early to look nowadays, but tell me what the deal was.
I mean, look, it's all the above, right? So,
because this is really interesting, because I bet you there's a ton of kids in your spot, in that same spot, where they're in a group. It is like they're getting worked to the bone and they just don't know where to turn. So where did you turn, and how did you kind of map out your next step?
It was all the above. So I think the key thing was not to be rash, right? You don't want to totally hinder yourself just for, near-term gratification. So look, there was a couple of recruiters I worked with. I actually ended up getting a couple offers from people I found through them. Didn't actually take those just because, again, be long-term greedy, not short-term greedy. That's kind of one thing I've always, you should always ask yourself, whatever career you take, position you take. So long story short, I think I actually found that job through my graduate school recruiting, the job board or whatever.
Yeah, I'm curious about the ones you turned down. Tell me what you meant by long-term greedy, not short-term greedy. There was some there were some high-paying jobs that you're being offered.
Better paying.
Like what?
Better work-life balance.
Like what? Like credit?
No. One was research for a large hedge fund.
Mm-hmm.
So it was almost more institutional. I wouldn't call it you weren't getting paid a ton. One was more just.
And what were you getting paid at the bulge bracket? I assume, the 80 base or 90 base, whatever. And
well, no, because we were getting paid. That was the worst part, is because I got the short end of the stick. We were getting paid more of the credit salary, but working the IB hours. So that's, I think, why it was horrible. I think
what was the salary? 70, 65?
I think it was 70. You got 10 or 15 bonus.
Oh my gosh. Yeah. Now you see, no reason to even stick around for the bonus, right? You're just like,
exactly. So I think that was, and again, to the point I said before, they had some turnover issues. And that was exactly
So then these other jobs you're getting, you're looking at like a jump from like 70 to 80 up to like 100, 110 or something like that.
It depended.
Yeah.
I mean, you could have gone to one of the hedge funds and probably been close to that. Now, a couple of these
in a research type role.
Yeah, but when I say research, you're just grinding out models, right?
Okay.
Which personally I can't stand doing. So that's just not if that's what I do all day. But look, those again, that's the important thing is those firms I knew had reputations even worse, right? Of like there was one guy I actually remember distinctly. He left to join that fund. He came back to the bank a week later and begged for his job back. So again, like that's the point of like put yourself in a position you're going to succeed. And so that was one I turned down.
Wow.
There
That's
was
when
one
you know it's bad that you leave a really tough group to go work on the buy side and then you just get it's even worse there.
Yep.
Wow.
Yep. So, that was it. Trying to be aware. I guess that was key, right? One was more of just capital markets research. So
yeah, I'll say to people, if you can't find this information on specific companies or groups, there's a lot of chatter that goes in the private messages on WSO. You can get a lot of information. So even if you're not getting a lot of bites from your forum post, if it's like a niche company, small company, keep trying because you can often get like the person LinkedIn's helpful too because you can look at people who previously worked there and kind of get the scoop.
And you can also look at how long they've been there because I've done that with a couple of groups of like, oh, so-and-so. When you start seeing the theme of like people less than a year, like it should raise some red flags.
Yeah, totally.
I mean, look, long story short, ended up at a family office. So those can be very interesting as well. Kind of the saying is you've met one family office, you've met one family office. So
how did you go about evaluating that? Because you had already turned down a couple of offers, it sounds like. So you were being kind of picky. So how did you kind of get comfortable with the family office, given that they're so idiosyncratic? It's like it's not an easy thing to diligence at all, right?
Well, back to the kind of same thing of just I had no idea what a family office was at the time. Like I had no clue. And so they had a product they managed that was investing in hedge funds. And so I was like, bam, that's what I want to do. Alternative investments. It was more in the allocating role. So investing into other hedge funds. But I got a corner office in one of the nicest buildings in town. The people were great and it was exactly what I wanted to do. I got a little bump in salary, but like it was really win-win-win, right? And it was a small team. So.
And you're working what now? 60 hour weeks?
Oh, if 50? That. Like
50? That's awesome.
40 to 50.
You're like, vacation. It feels like
yeah, exactly. It was one of those. I remember for a while, I was like, I don't know what's with all this time. Like, so
it's one of those things where if you actually think about it, you actually didn't get the salary bump. You doubled your pay. You doubled your hourly pay.
Well, it's the same with like, I think a lot of, I guess your viewers should remember that too, of the only thing you're doing is trying to, do what you want to do. Because if you're only worried about the ratio of energy put in versus money made, like you're better off being a unionized plumber or electrician than an investment banker in a lot of cases. And I'm dead serious. Like, think about that. Like, just because, if you really, really want to evaluate it that way, there's a lot of other ways to make money too. So,
talk to me how you got comfortable going to what was really like a place where you weren't making direct investments, you were making investments for hedge funds. You just really loved the space, the alternative space. You loved looking at different types of investors and stuff like that. That's what excited you? So you're like, this is perfect for me.
Exactly. And then also, to be fair, in a family office, you do direct investments as well, right?
You were doing like co-invest and stuff with them? Okay.
So you have portfolio companies you manage, you have co-invest, you have private equity.
So you're getting kind of a flavor of everything, which is really nice.
Yeah. And you learn what you like. You learn what's BS and what's not.
You found this role through, sorry to interrupt, you found this role through your alumni network, you said?
Just the job board on the university. So dumb luck, I guess, is the technical term. So
were you networking at all, kind of coming out of your bulge bracket? Were you like networking? I know you talked to a few recruiters and got some offers through them, but
I was networking, but that is not even remotely how I found this. This is pure dumb luck.
Okay.
without a doubt. So,
Fair.
and look, it was the cool thing about this, and I think this has probably shaped a lot of my career thus far. Again, look at the environment you're going into. So the person I replaced was, technically a managing director, was probably there 15 years, right? And so I stepped into his role. There was, so it was a family office. So there was the patriarch. We had a couple admin support people, and then our CIO, which was located across the country. So the whole point is you stepped into an immense amount of exposure, right? And an immense amount of autonomy. And I think the key thing with that is don't take it for granted, because I was the person for everything. So I met with managers. I went out and, worked on new deals. I got an incredible amount of exposure and experience. So like, it's kind of one of those of like, if all I was trying to do was
How did you convince them less than a year out at the bulge bracket to give you this job where this guy's been there for 15 years? And did you get any kind of flavor of why that person had left after so long?
Yeah. So it's funny. It's kind of one of those, like, you could tell something wasn't, I don't want to say not adding up, but like, so he moved across the country, he got married. By the way, he was independently wealthy, exceedingly independently wealthy. So this was
the person who had been there for a long time.
Yeah. That
no
left.
motivation.
So
no motivation.
Well, yeah. And then look, it was, to be fair, so there's always a catch. That's every investment always has a catch, right? So this one, to be fair, it was an incredible amount of exposure, but it was also declining business. It was a declining firm. It wasn't dire, but
why do you say that? What do you mean? The family office was declining?
Yeah. So the family office is one thing, but the asset management business they had, that was declining.
Got it.
The family, you could tell, was losing interest. And, look, family offices are exceedingly expensive, and they're only successful in certain instances. And I mean, you could just tell, right? The guy didn't have an interest in it. So that part was kind of becoming less prioritized. And look, the business, which is related.
When you say the guy, you mean the guy who left or the CIO?
I'm sorry, the patriarch.
The patriarch that the head had. Okay.
Yep.
So how often were you meeting with them?
With the patriarch?
Yeah.
So no, he was in the office, so I saw him every day.
Oh, okay.
Right?
So but your CIO wasn't there.
He was in the New York, Connecticut area.
And where were you?
Texas.
Oh, okay. You're still in Texas. Okay.
Yeah.
Got it. Okay. So yeah, tell me were the dynamics like, did you ever, it's a little scary going to something like that with given so much autonomy after like being told like when you can go to the bathroom. Tell me about how you made that transition. I know for me, it was very difficult going from banking to private equity because I felt the same way. It's like all of a sudden I'm in this office with like 5 other people. No one's talking to you or saying anything to you ever. And they're just kind of like, occasionally they're like, oh yeah, we're going to meet with this company, blah, blah, see you at the airport kind of thing. Very different. Tell me how you got comfortable with that.
I mean, look, you don't hesitate. You just take that was the biggest thing. You take every single opportunity you're given, right? Happy hours, conferences. And when I say happy hours, I'm serious, like event industry happy hours, conferences, managers coming through town talking. Like when you're what is called an allocator or an investor, somebody who allocates money, you're given a special card. Everybody will talk to you, right? And you use that to the fullest extent, right? And so that's what I did is I, as much as I could, talk to hedge funds, talk to other family offices, other high net worth investors.
You start kind of mapping the landscape, trying to get a better feel of like who you should be watching and who you should stay away from.
Exactly. Well, and build your network too, right? Because this industry, like the institutional investor, part of the industry, it's just incestuous, right? So like it is all network based, and it's, figuring out, I don't want to say who's who, but like really building that out and figuring out where you fit and really just building those relationships. It sounds cliche, but it's really true. So
you were doing all of that, but how did you convince the patriarch, we'll call it, to actually bet on you when the person had been there for so long, was so senior and had all those relationships? I mean, isn't losing that person like a big deal? And then bringing in somebody so green to kind of take that over, or how did you convince you were the right person.
Well, I mean, look, I guess it sounds cliche, but just, I mean, worked really hard. And then I think it was just a genuine enthusiasm, right? Like, it's one of those things of, if you're doing something you really enjoy doing, like, it's not work life. It's literally all meshes together, right? So, I mean, look, I started off, maybe as specifically as I can answer that question, I started off in more of a pure research, building their models role, but bringing insights, bringing in new investment ideas. Again, back to what I was saying before, of talking to people, finding out what's out there and bringing it back and presenting it. Because
how'd you even source those though? How did you even know where to look or where to source deals? Like, and specifically, or I know you could talk to hedge funds.
Yeah.
They all wanted your money, right? So that's easy. But like other specific niche opportunities and stuff, how'd you?
It all gets back to the network, right? So other family offices, club deals.
So you just all of a sudden you started getting into these networks where like deals are getting passed around, and oh, we're going on this one. You want to come?
Yep. And it's a flywheel, like, right. It's a virtuous cycle. Like, you kind of put in what you get out. In mine was, look, you just show up, you're genuine, and there's a flywheel effect, right? The more people introduce you to the more people, et cetera. And so I think it's trying to do that. And then, or go ahead.
Yeah, I was just going to say, when did you feel like you hit your stride? Like a year in, did you feel like you had that kind of built out, or did it just continue to kind of build throughout the 2 years to the end where you were like, basically super well connected? Or did you tell me kind of how you felt you progressed through those 2 years?
The first year was like just a huge learning. Well, first 6 months of a year was a huge learning curve, right? Because you learn the landscape. It was entirely foreign, right? What are the different types of hedge funds? What are the different types of private equity vehicles? Like, just kind of figuring out what fits where.
Yep.
And look, you reach a point where you kind of get to that stride, I guess you could say. And look, I'm still learning. Like, if you're a good investor, you're always going to learn. There's always something new to invest in. But for me, it's like, once you could become pretty self-sustaining, it's about a year. And then the rest just really becomes really cultivating networks, really cultivating relationships, and just, ability to kind of tell what's BS and not.
So I assume the interview process to even get this was very just ad hoc. Like, you had met them a couple of times and they're like, okay, yeah, you're hired.
Yep.
And that was it?
Well, I just remember, I don't know. Like, I think
no modeling tests, any of that stuff?
No, that was just like, it was a pure culture. I do remember one distinctive conversation with our controller, who's like, I'm still really good friends with. And I told her, I was like, she was like, why should I hire you? And I was like, I actually really don't care. There's probably other smarter, more intelligent people. I'm going to work in this industry. So it's either going to be with your company or somebody else's. And that's the only thing I distinctly remember from that interview. So I think it was just, there was a clear intellectual curiosity and eagerness to be doing that specific thing. So,
was the controller, did she like that answer?
She told me she did. So, I mean, she could be full of it. So
you didn't BS. Well, you're just like, look, this is what I'm going to do.
Look, the big thing, I think, particularly when you get to a hedge fund or you're an investor, this is what I see investing in people or from other successful investors. The number one defining characteristic is a genuine interest. They would do it. I don't want to say no matter the pay, but it's because I love doing it. There's an intellectual stimulation, a curiosity.
Yep.
That's what's innate with a really good investor. It's not about comp. I mean, I'm not saying it's not about comp or money, but like,
yeah,
that's I think
scoreboard. That's just a scoreboard, but it's
and I think that's ultimately what drives people, right? Is like that intellectual desire to go find and research interesting or whatever
So
opportunities.
for sure. Okay, so you're there for 2 years. Why, as you're hitting your stride in your second year, the person before you had been there for so long, why start looking elsewhere? Was it a regional thing? You wanted to move elsewhere?
The founder shut the company down. So like I said, it was, it was back to the family office thing.
That's what I was going to say. I'm like, it's really risky with the family offices too. It can be great upside and great autonomy, but it can be, that could happen. Luckily you had 2 years in there.
Look, remember anything with a family office, in some ways they're the ideal jobs. If you find the right group, it can be the greatest job ever. It really can. Now, with that said, remember you are working for one person. And that person is prone to the same emotions, just everything, right? So there's an inherent level of volatility embedded in those organizations. And so that's ultimately what happened. The company shut down, and pretty abruptly, I might add. So ended up looking for my next gig. I actually moved, kind of, I'm assuming your next question would be, where'd I go? How do I find it?
Yeah.
That was
So tell me about that stint of learning you lost your job,
yep.
To landing on your feet somewhere else. Tell me about, like, first off, what was it like when they told you? Were you just completely shocked? Was it out of the blue? It says you said abruptly, but was it like a complete shock, or were you like kind of worried before that?
That's an interesting question. The abruptness was shocking. It was kind of one of those of, like, you could tell the guy had no interest in really focusing on this. It was, let's just say,
what was he interested in focusing in?
Going to his very large ranch elsewhere. So look, I mean,
he didn't want to be bothered with.
They're very expensive too, right? Very expensive real estate, lots of employees. Like, they're not cheap.
How many employees did the family office have?
2, 3, 4, 6.
Yeah, so it adds up.
Yeah, and 2 very expensive office spaces. So, you're dropping a couple $1 million a year on something that's ultimately, and so it's just more of a headache than benefit, right? So,
yep.
Look, kind of moving on, and I think anything I've gotten beyond that is it's all network driven, because it's once you have that strong foundation, ideally a strong reputation, that's what kind of guides your next moves. So interestingly, somebody I knew, our old CIO, I guess I'd say, sat in the same office as the person that I ended up joining their firm. And so it's just back to that small world, right? So my old CIO, my new boss, sat in the same office as my old boss. But I had moved across the country kind of on a whim, right? I was young, didn't really have anything keeping me there. Joined a large investment consultant. So what we did rather is large, ultra high net worth foundation, family offices, foundations. We were outsourced research. I focus particularly on hedge funds. So, there was a number of, let's just say, very well-known billionaires, tech billionaires in Silicon Valley that we consulted on their hedge fund portfolios. So
got it.
It was, it's as simply put as that, right? So,
and why did you jump there? Just because that connection, that network, kind of made you feel comfortable going there, that you'd be a little more stable?
There was that, the connection. Frankly, it was a job. And
did you struggle to get interviews when that family office kind of shut down?
I wouldn't say I struggled. I think one thing to remember is, and this is an important thing, like, I guess with any job, but you start if you get too specific of a skill set, you almost start eliminating yourself. So yeah, I'd done a lot of work in alternative investments, but like, there's not a ton of people that, it's like, that are looking for, I need a hedge fund private equity analyst. Like, there's not a ton of those jobs out there, right? So it was kind of
like an alternative investment fund of funds person or whatever. There are those fund of funds though. Like, there's a lot of them in New York and stuff. Did you ever consider going to New York?
I did. I mean, between you and me, I don't know. I spent a lot of time for work there. I don't know if I want to live there. But,
fair. Okay. So so you move somewhere else. You get this role. It takes you a while to land in that role. So did you have other offers that you turned down again? Were you being picky even though you were unemployed?
Yeah, I mean, I think there was only 1 or 2, and I think those were more in your pension kind of world. And so that's a different game. It's a little less, I don't want to say, I guess entrepreneurial, literally, but it's the way pensions allocate investments are more risk averse, right? So it's your job is
why are you saying that's more entrepreneurial? I would think it's the opposite.
No, less entrepreneurial.
Oh, less entrepreneurial. Yeah. Okay.
Yeah.
Agree with that. Okay.
So it's, I mean, look, the whole point is, like, your job is to keep it keep it down the fairway, right? So nothing
didn't excite you.
Yeah. And I think, honestly, I think that was, personality wise, maybe not exactly, the best fit for me. So at the consultant, I was actually there only briefly. Back to the network, I had a colleague that I'd met in the area, who ran an investment firm, and he took a position. When I moved up there, we talked ideas, we stayed in touch. I had helped him get into a couple of specific investments, and
At
he took a job
at your previous firm.
at both, actually.
At both.
So,
okay. Yep.
And just again, stayed in touch, tried to be creative wherever I could. And he'd actually reached out to me, took a position at a large foundation, I guess you could say, and asked if I'd be interested in stepping in for him as more of a portfolio manager, director of research role. Which, again, let's caveat that it was a very small organization. So trust me, I was not rolling, and it was more back to the experience and the exposure, right? Because
this is the latest role. This is your time with your latest role.
Yes, exactly.
Yeah. And so, are you able to share kind of pay at the family office, and then to this consulting kind of hedge fund research analyst role, and then latest, like just ranges even?
So look, and it depends on the structure. The family office more like 80 to 100. Consultant, I'd say about the same. Now the last role, where it starts getting tricky is when you start getting into GP and equity interests, right? Because then there's theory and reality. So
tell me cash comp, and then tell me potential theory.
Let's just say cash comp was 80 to 100.
Okay, similar. Okay, but you have some upside now.
Yeah, right. And there's some funny things about that, but I think.
So is this last? There's LPs and GPs, and there's carry and all that good stuff. It's very much a hedge fund.
Yep.
Okay.
Well, I guess in our case, technically, we were a fund of funds. So I mean, still same structures, albeit more deleted. Yeah.
Right now. Okay. Yeah. And so you're doing a lot of the work, similar work you did from when you were at the family office. Basically, you're making those connections again. You're talking to. Okay. Very cool. So tell me, how's that been? Is it a smaller office? Well, not smaller, probably smaller than the consulting, but yeah. Tell me about that.
So we got 3 people. I handle all the investments. We have somebody that does a lot of our operations, work, back office, and then which is called founder, who does more of the client relationship, et cetera. So look, it's kind of back to what I was saying before. It's about the level of exposure you get, right? Because you're the guy, for better or for worse, right? And so that's the key difference is when you make an investment decision, if it goes bad, there's no director or anybody else to hide behind. Like that one was you. So yeah, it really changes the way you think about a lot of stuff. I think for the better. So.
How do you think about like portfolio construction and just like the fund of funds and how you're allocating things? Like, is it super, maybe if you can, whatever you can share, is it super like diverse? Like, are you allocating resources to like 30 hedge funds, 10, 100? How do you think about that and your diversification and strategy?
So for our group in particular, it doesn't, I mean, it depends what game you're playing. If you're a family office, if you're a foundation, like everybody's trying to accomplish something different, and you should structure your asset allocation accordingly, right? So what we do, I mean, look, we help with some direct stuff. Like we have a couple of ultra high net worth clients who will work with either real estate deals or, maybe some co-invest, but predominantly in the flagship vehicle, we're small. And so what is our, value add to, like, why should you give us your money, right? And it shouldn't be put you in Millennium or any of your marquee names, right? Like, why would you put somebody to find that? What we consider our value pitch, our value proposition is we're going to go find interesting and unique investments that you can't find elsewhere. And because the whole point of a hedge fund, let's just step back. The whole point of a hedge fund is, in my mind, it is either the only way to access a particular asset class or strategy, or it's the best way. So the only way, there's, like I said, an infinite number of hedge fund strategies, and hedge funds are a pretty nebulous term. There's an infinite strategies, and sometimes the only way to invest in them is through this vehicle. On the flip side, it might be the best way. So let's think of a biotech manager. You and I could go buy some biotech stocks tomorrow. I would recommend we let the hedge fund manager with the PhD and MD do that for us. So that's the best way. So that's kind of how we approach it, right? So with those metrics, so with those kind of characteristics, the question is, okay, so what's good, right? Because there's a whole bunch of junk out there. So really where we see our value add is we go talk to a whole bunch of people. We turn over a whole bunch of rocks, but there's really interesting managers or strategies or just even investment opportunities. And by definition, these guys aren't at Goldman. They're not at Morgan Stanley's, flagship conference. They don't market. They're, keep to themselves, and they're busy making money, right? So that's how we approach it. I mean, I know it sounds simplistic, but you learn a lot. You see all sorts of different things, and I think that's what keeps me doing it. Is you're consistently learning, you're consistently seeing something interesting, and it's never. I don't want to say it's never dull, but it's not as dull as some other things you could do. So,
tell me a little bit about just some of the pressure in the hedge fund industry that's experienced over the last several years, and just how you view. I mean, there's a lot of fee pressure already, and then you view, as a fund of funds, how you view kind of your ability to kind of withstand that pressure. Obviously, if you're doing a great job of selecting managers, there's some protection there, but can you talk to me about your thoughts there? Like, do you feel like this is a good place to be? Do you feel like as long as you're at you pick the right fund of funds, you're okay? What's your thoughts there?
So there's a lot of interesting questions there, right? So first of all, I think the way it's the old model is dead. I mean, I think without a doubt, like the old access model, we're going to aggregate assets and put you in big names. There is no value to that. Now, potentially, the question is, where do you add value? So one, maybe finding something interesting, finding something new, ideally giving some sort of seed capital and taking a part of the general partnership. You're essentially investing in that fund as a business, right? That's where you add tangible value to not only yourself, but your investors. I think the hedge fund industry as a whole, so if I was like giving advice to somebody that's like, I want to go work for a hedge fund because I'll make millions and millions of dollars. Like, yes, there are those cases, but I can tell you for every single multi-millionaire, billionaire hedge fund manager I've met hundreds that make less than your average software salesman. And again, so why would you do it? I know this sounds super cliche, but you have to love the research process, picking stocks. And that's, I think, not only what makes you successful, but if you're only concerned about making money, like, for the love of God, go do something else. Like, there's so much, like, it's just not worth the time.
There's a lot easier ways.
Yeah, exactly. But I mean, again, it's if you like the research part, if you like learning, just the intellectual, and I know I keep saying this, but it's true. You have intellectual curiosity. It can be very rewarding still. But ask yourself that question, and I think try to play a different game, right? So, maybe you're value-oriented, long-short manager. Maybe that's tougher, but can you invest in, I don't know, a fine art strategy or government investing in government receivables? Like, there's a lot of different ways to do it that just may not be the, tried and true method. So.
For sure. Interesting. So anything else you'd like to share before we call it? Any kind of final words of wisdom? I mean, I think you kind of just shared your final words of wisdom, but anything else that we missed that you think is important?
I mean, hopefully this has been somewhat helpful for people. I think the other thing I would tell people is, what's the guy? Look for asymmetric opportunities, right? So go meet with people. Go, like, if it's not hurting you, go to that happy hour. Go to that. Just talk to people. Build your own opportunities. And to the next, to that next point is be long-term greedy, right? Like, where does this get you long-term? Whether that's pay, whether that's profession, whether that's skill set. Like, I'm not saying don't care about anything short-term, but like, humans by nature are short-term oriented. Try to
switch that
build
path.
your future success. So yeah, exactly.
Very cool. Well, listen, Texas investor, thanks so much for joining us and sharing your wisdom.
All right. Thank you.
And thanks to you, my listeners at Wall Street Oasis.
If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.